Yeah, as a group, we have right now out of the 15 million square feet, 6 million square feet is being constructed today, which is approximately 6,000 plus homes. So this is a brief about what we do. In terms of the detailing, we do all types. So when we call our product affordable, which is 65%, 66% of our portfolio, we mean that the product line is below 5,000 rupees a square foot. The mid-income segment is categorized between 5,000 to 10,000 rupees square foot, which is comprising of around 30% of the total, 33% of the total area that we are developing. And 2% is in the premium segment, which is 10,000 rupees plus in terms of the saleable area price per square foot. So this is how we have categorized ourselves. Today across MMR also, we are spread across 10 different geographies, which include Vashi, Kharghar, Taloja, Panvel, Khopoli, Karjat, Badlapur, Titwala, Shilfata, Kalyan. So we are spread across majorly the Central Railway as well as the Harbour Railway line, which also helps us de-risk ourselves with respect to operations, with respect to market share, and it allows us to participate in various segments, wherever there is a good, where we see that there is a good demand for the affordable housing or mid-income housing segments. So we are very quite widespread to de-risk ourselves also, and at the same time we also sorry, we also have been able to spread across and do operations in multiple locations, which has strengthened us as an organization over the years. As a company, our philosophy is to function as a manufacturing unit and not function like a speculator or a lala company. So since 2014, if you see the annual report also, the cover page of 2014's annual report is Factory of Homes. So the company is exactly like a manufacturing unit. There is some products which are there on a design stage. There are some products which are there on a land acquisition stage. Some products which are just commencing the construction. Some are at mid stage. Some are nearing completion. So across the entire 365 days, we have something happening at every vertical of the organization. Coming to the size of the organization, we are a team of 400 plus people today, spread across all the verticals. Our core focus is on efficiency, and we have a lot of systems and processes which help us function many verticals in-house as well.
Okay,
so the brief about us.
Here, if you can just also brief us about the key personals and their roles very briefly in the company.
Sure. So on the board, we have 5 directors today, 3 whole-time directors and 1 independent director. So Mr. Ashok Chhajer is the chairman and managing director of the company. He heads out the corporate strategy, the land acquisitions, and Mr. Nimish Shah is there as a whole-time director to the company, who is looking after engineering, licensing, and entire billing and estimates for the projects. I am there on the company. I represent the sales side, the marketing side, as well as the finance side, and adding to that, the investor relations. Apart from that, we have 2 independent directors, Mr. Arihant Bhootra, who is ex-chairman LIC India, and Mrs. Chandra Iyengar, who is ex-chief secretary, government of Maharashtra. So we have a good board, participating board with us, who not only attend the meetings but also guide us on all multiple and strategic decisions. On the management side, we have Mr. Dheeraj Jupat, who is the CFO of the company. We have Mrs. Darshni Lakhani, who is the company secretary. We have Mr. Vijay Desai, who is looking after the engineering. He's the head of the engineering department. We have Mr. Ashok Chhajer also, who's looking, who's from the promoter family, and who's also looking at construction, human resources, and he handles the entire Jodhpur division as well. And Mr. Kapil Sengar is there from the sales side, so he's heading out the sales vertical as well.
And the other thing is, if you can just brief us about the ongoing projects and upcoming projects in terms of saleable area and gross development value, a little bit on that side.
Yes, so the saleable area right now, what we are working on the portfolio consists of 15 million square feet of area, is what the company has undergoing for development. The total revenue we can expect from the 15 million square feet over the next 5 to 6 years is around 8,000 crores.
Okay, and how many like ongoing projects and upcoming projects?
So we have 15 ongoing projects today, 12 in the Mumbai MMR region, and 3 ongoing projects in Jodhpur. Apart from this, we also have 3 more upcoming projects, 1 in Jodhpur and 2 in the MMR region, which will be coming up over the next 1 to 2 to 3 years. So this 15 million is totally paid up lands, all fully acquired. Majority of the projects are under like 100% ownership, like fully outright bought land. So only 3 projects are there where we have a joint venture development partnership. Apart from that, everything else is fully purchased outright lands.
Oh. The other thing is about the Navi Mumbai. So specifically, so what are the growth prospects you're looking at Navi Mumbai, and what is the current scenario since a new airport is also coming up in that area? So what are the kind of...
Parth, I will take it from here.
Yeah.
Okay. I'll take it from here. So Navi Mumbai happens to be the most, we can talk across as the hottest location in terms of real estate, which has larger profitability also. It is called majorly MMR region. The infrastructure helps out to the airport, the MPHL link, the Diggy port, etc., where the government is spending all of 1 lakh crore plus projects in Navi Mumbai. And we being in this region have this advantage of edging up and taking the advantage, taking the best business cycles of the region in the coming next 5 to 7 years. So the revenues which we did up last year was 392 crores, which is around 18% CAGR. And we have the highest market share also when it comes to number of units being sold. And the basics have been that we have been buying lands more, and a few of them have been onto asset light model in terms of joint ventures. And due to this, the efficient cost management which has been done in terms of land acquisition, in terms of which happens to be an average of 250 to 300 rupees per square feet of FSI across the total company. And due to this also, the last 1 decade where the cycle was seen for the real estate as 3 to 4 years were seen as bad cycle, we still could do well and keep our projects ongoing. And in spite of 1 decade of overload, still the projects have profitability, and the new projects this enables us that in terms of cost efficiency, when we talk, our operations have been very much into cost efficiency. Anupama, I would like to throw the dais open for question and answer, because these all details are already there.
Okay,
I would wish
okay, sir, I'll do that. Yeah, sure. So if you can allow me for a couple of more questions, is that possible?
Please. Yeah.
Yeah. So just wanted to understand any plans of like what is the redevelopment project scenario as far as Arihant Superstructure is concerned?
We have started the first redevelopment project in Navi Mumbai, and that is Arihant Advika. The product is around 400 units, and it has started off 6 to 9 months ago. We see the closure of the project around 3.5 years from now.
Okay. So now I'll open the forum for the any Q&A. Just give me a moment. So participants can ask, either raise their question or put their question in the chat box. So we will keep taking up one by one. So there's one question regarding average square feet realization in Navi Mumbai for semi-luxury and luxury apartments.
For our company, we today have an average selling price of around 5,500 rupees a square feet, and till this financial year ending March 23.
Okay.
The company sees a lot of costs.
Okay. The other thing is, any plans in like you want to increase and get into premium segment?
We already have a proper mix of all the segments, and the new project which is on villa style is into a premium segment, and that would see around 500 villas being constructed across an land spread out on 55 acres. Plus the add-on would be the two revenue models, which is in hotel resort of 200 rooms on hospitality, which would give an return on investment of around 15% plus to the company on YOY.
Okay. The other thing is the company planning to do any commercial projects? So you are on mute. Sir, can you unmute yourself?
What is it now?
Whom is it for?
So there's a question that is the company planning to do any commercial projects for rental income?
The incomes on the same lines would be the new project which has project which is taken, where it would be on annuity basis or on rental basis, and that would be 200 rooms of hotel resort as well as the Gymkhana. So Gymkhana will lead up an membership fees on basis and property asset creation also. So any other new office spaces or workspace building is not yet on the platter. Given a good opportunity, the company would surely invest into it.
Okay. The other question is, what is the growth they are, the company is expecting, and what margins are you expecting over the next 2 years, and what is the cost of the debt?
The average cost of debt today forms out to be of 13.5%, and that includes debt taken as in capital for project acquisitions. So we have a spread from 11% onwards, 11.5% onwards up to 16.5. So, and blended average cost of debt happens to be at 13.5%. And the growth, what we see in terms of percentage completion projects which are there on the platter, we are confident of a growth of 25% to 30% on annual to annual basis, and it can rise to an larger levels also. The sales have been good, hence the execution of the projects can yield larger growth, larger revenues also, and the margins are increasing on every YOY basis, because as and when the new project is infused, which has yet not borne any financial cost, that gives up on better margins, and the blended margins today happens to stand at around 17-18%. We see that with the new projects with a margin of 30-35%, we would be able to achieve up in 22 to 24% of margin in the coming 1 to 2 years.
Okay, the next question is from Rajendra Doshi. He wants to know the names of initial promoters of the company and whether Mr. Ashok Jain is connected. This is his question.
No,
The
Mr.
names of
Ashok
initial
Jain is
promoters
not
of the
connected.
company.
The promoters of the company are Ashok Chhajer, Sangeeta Ashok Chhajer, Parth Ashok Chhajer, and Bhavik Ashok Chhajer. So 4 are the promoters of the company, and few may who does not have a larger stake are Lalit Bothra and Meena Raka.
Okay. The next question is from Darshika Khimka, and she wants to know, the company has a land bank of 200 acres. What is the value of this in the balance sheet under inventory? And 10 million square feet of forthcoming projects are included in this 200 acres?
The total value of land on balance sheet should happen out to be 375 crore rupees after this new acquisition also.
Yes, Rajendra Doshi, you can ask your question.
Yeah, I had asked the question about the promoters because I find the sponsor of this today's seminar is Arihant Capital. And Arihant Capital I'm familiar with. Because of the Arihant Capital connections, I raised the question whether Ashok Jain is connected. That is the only reason. You may clarify or you may not clarify.
Both are separate entities and they don't have any financial transactions between each other.
But Arihant Capital is sponsor of this today's meeting?
He is
because your banner says
coordinating.
Arihant Capital.
Yeah, Arihant Capital is arranging this meeting between the investors and the company.
Okay, appreciate
So
it.
we're just hosting. Yeah, we're just hosting. Yeah.
Okay, thanks.
Yeah. So the next question is from Mr. Thomas Sebastian. What is the approximate annuity income from the hotel projects and Gymkhana?
They would start off, yet the land is taken, it's on the drawing board stage, and would take around the first phase to start off after 2 years. We see an business model where the annuity income would be around 15% per annum plus for the invested amount.
There's one more question from Darshika Khimka. She wants to know what is the FSI in the areas in which the company operates?
The FSI across Maharashtra today for any developer other than Bombay Municipal Corporation City is with the unified DCR is 2.6 maximum, including the TDR from the government. So it happens to be 1.6 FSI plus TDR from the government. So 2.6 is the maximum potential of the land in these regions.
Okay. The other question comes from Tanishk Sarda, and he wants to know if he can get a figure of how much is construction cost of projects per square feet basis for any apartment. And do we have any engineering team or do we have subcontractors?
Everything is done in-house in terms of engineering, and that is where the efficiency comes from. The cost of the construction differs from low rise to high rise. So an average lowest construction cost today happens to be at 2,000 rupees a square feet, including GST, for a normal building which is 7-storied, and thereon for 10, 15, 20, and 50, up to 53-storied. So a cost of construction for the 53-storied building would land up to 3,750 rupees square feet.
Okay. The next question comes from Jignesh. He wants to know, generally new sales are based on what payment terms, of slab based or any other offer like 25% per year for 4 years kinds?
Different schemes are there, but generally maximum operations are on construction link plan. As and when the stage of construction is done, the receivables are received, and hence we tell that the projects do not require any working capital, and the receivables from the customers are sufficient enough to take the project throughout its cycle.
Okay. The next question is from Mr. Ketan Kotecha. He wants to know, last con call guidance was given 4x in coming years, coming 3 to 4 years in terms of all parameters like business size, top line, bottom line from existing one. Is management confident to deliver on that guidance, and what gives that confidence to achieve that?
The environment, the real estate cycle today is into an great positive momentum. What we see the post-COVID. So on those lines, the receivables can achieve the same guidance in the next 3 to 4 years. We are confident of touching up the 65 to 70% of 8,000 crore rupees of businesses to be taken in the next 4 years.
Okay. The next question is from Akshat Agarwal. He wants to know, how is the company planning to acquire lands for future projects? Whether the revenues from current projects would be used for leveraging, would be used for the same, or fresh capital from promoters will be infused?
The capital infusion has not been done to the company after 2012. And it is the new acquisitions are from the free cash flows from the existing projects, and in addition to it, as and when required, we have opted for whether we have raised funds through debt and loans, and for the sake of new acquisitions, we see that the existing projects would be on the chart in this financial year 23-24. Few little acquisitions more can be gathered, as guidance note in the previous years was that we would double up the total size of land for the projects, and which we have almost achieved it across. Hence this year would be implementation the implementation year. Thereafter going forward, we see that new acquisition can take place, and if required, the capital will be raised in either equity or in debt format.
The next question comes from Mr. G. Venkata. So he wants to know on the debt reduction parameters, and so
it would take real estate happens to be a very capital intensive industry, and it requires capital every time and every day as and when growth is taken. So growth is always related to capital, and the plan which the company today has is about going debt free from here onwards in 4 to 5 years, where we see that the debt, the maximum or the most of the debt would be returned back to the borrower, to the lenders.
Okay. The next question comes from Mr. Jignesh, and he wants to know, what is the company plan to do with the land parcel Akarshan project?
Akarshan project, part approval would be seeked across, and we see that either the government, we would get compensation in terms of land acquisition by the government, or else an approval, continued approval, which is there to start off the construction. So we see that Akarshan should see and start off construction by 9 months from now.
Okay. The next question is from Darshika Kinka. She wants to know, could you help us with the project-wise cash flows and plans for the next few years for the ongoing projects?
Yeah, these are very detailed working which
over
are
next few-
existing.
Yes,
These are very
yes.
detailed working which are there existing with the finance department and the CFOs. We can share it out one-to-one basis also, where
Yes, yes.
on every project basis, the cycle of the project and the cash flows of the project are ready with the company.
Yeah, Darshika, we will get back to you regarding this. The next question is from Prakash Bhootra. He wants to know what is the current debt of the company?
As on date, what we talk about today, it would be around 375 crores.
Okay. The next question comes from Rajendra Doshi. He wants to know present net worth per share.
Present net worth per share. The capital and reserves happen to be around 275 crores.
Okay. I guess we are short on time, so we'll take couple of... Yes, sir.
Yeah, so accordingly, the net worth can be calculated. The valuations would be something separate.
And we will share this data.
Enterprise
Even we
value,
can share.
yeah. Okay, fine.
Yeah, we will share with Mr. Rajendra Doshi later. The next question is from G. Venkata, and he wants to know, are we expecting stability in gross and net margins in future projects? Please share any details in this regard.
Yes, we see in continuous growth also in terms of net margins and the PAT margins. And we would be able to see an CAGR on YOY basis. And the detailed working is there with the CFO, which can be shared, which speaks about all the outcomes of the project on quarterly and monthly and yearly basis.
Okay. The next question is, what are the realization per square feet, average realization in Jodhpur, like currently?
Jodhpur, around 3,300 rupees a square feet. 3,000 to 3,000 rupees a square feet in Jodhpur.
Okay. So I think we will just, okay, we'll take a couple of questions from here also. Yes, Rajendra Doshi, yeah, you can go ahead.
Yeah, when I asked about net worth, my intention was to know what is the book value per share presently. Means, or the debt equity ratio, you can tell me, whatever is convenient to you, either debt equity ratio or the book value per share. That was my curiosity.
Book value today per share would happen to be around 78 rupees.
Of rupees
with
10
the
face
reserves.
value?
Face value
of
is
share
10, yes.
Okay.
Face value
Understood.
of share 10.
And any idea about the debt equity ratio presently? Just
yeah, sir, I'll share. Okay.
Around 1:2. The attributable debt happens to be around debt to equity ratio of 0.75:1. So the higher presentations and etc. details are there.
Okay, appreciate.
So I think just a couple of more questions we'll take and then we'll close down. So I just wanted to understand, like Jodhpur is a very big pie of the whole thing. So any like reason for that? Any legacy land or any that kind of thing in Jodhpur?
No, the land was bought in the year 2010-12, and it doesn't happens to be the bigger pie when it compares to the total size of the project in terms of value.
Yeah.
The value of the project of Jodhpur versus to Mumbai happens to be 10 versus 90. So the major is all about Mumbai, Navi Mumbai, and Jodhpur happens to be a steady standard business.
Okay. So I think we are done with the questions, and thank you, Ashok sir and Parth sir, for giving us such insights and for answering all the queries for our participants. And thank you so much, all the participants, for coming over on Saturday morning and attending this session. So thank you so much, sir, for coming over and giving us insights about your company. Thank you.
Yeah, thank you.
Thank you.